Hello everybody, welcome back. This is episode number 17 of the Trading Bootcamp series, and in this episode we will be diving into a really important topic that I see many traders, profitable and not profitable, make, which is journaling. Why is journaling so important? While journaling is actually a part of emotions, that's what I like to say. For example, if you don't journal, it's basically meaning that you're not up to date with what mistakes you did, what mistakes you didn't do, and then you can never progress because you're making the same mistakes because you're not taking part, you're not knowing what to actually do. And in this episode, I will be looking and I will be teaching you how to trade and how to journal your trades and how I journal my trades so you can guys copy as well. So let's start right here with this image. So as you can see right here, this is an image I wanted to do while capturing my notebook, but I couldn't. But basically, this is my trading notebook. As you can see, we have a lot of these indicators. That is why I am becoming profitable. And let's look now. So you have trading journaling. This is the most important thing that you need to do, basically, is journal your trades. It's the most important thing. It will keep you up to date. Profitable, not profitable, you should always do them. Then I'm going to explain why, and you're going to tell me why by the end of this video. Now let's look into the format. So this is my format for journaling trades. So I got the date that is today that I took my trade, the win-loss and percentage or risk to reward. It can be both or it can be just one. Then you got your bias or your bias, which can be bullish or bearish on the 4-hour, 1 hour, 15-minute, whatever. Or you can just have the Market Maker X model, which is a video that I mentioned. So I'm going to be putting it right here, which is a video that I have previously talked about. Yeah, you really should know about that. And because if you trade a power 3 especially, or if you trade something that has to do with accumulation, manipulation, distribution, that is the video for you. That's why you got the market maker model as your bias, because it is your bias. And then you got the trade overall. This is basically everything that happened, like when you first saw your setup to when it last hit your take profit or stop loss. And then you got your emotions, really important that you take care of these before, during, and after. You usually do before entering, of course, during, while you're in the trade, and then after, once you start to write actually this, is when you basically do the after. And then you got improvements or what I did right or wrong. This is pretty much what you need to focus on, because mistakes lead to success. If you don't have any mistakes, why are you even trading, basically? Because trading involves a lot of mistakes, and you actually learn from those mistakes. Therefore, if you get a loss, which if you're starting out, it's going to be a lot of them, and it's totally normal. But if you get a loss or a win, you should always improve and write what you did right or wrong, even if you won, as I mentioned. And then you got this motivation. This is optional, but it's just to keep you on the right track. I like to put it. Now let's look at the example. So you got right here, this is today's date actually, it's Valentine's Day. So if you're a Christian, if you're a Catholic, if you're Orthodox, this is for Saint Valentine. So you got the 14th of February of 2026. It's the day that we are on. And this is an example. I did not trade today. Of course, it's Saturday. It's just an example so I can make things clear for you. And then you got this example, it was a win trade. It was plus 2%, which as you can see, win-loss and percentage and risk-reward. I use percentage. You can put risk-reward. I'm going to teach you risk-reward in a later video. And this is the bias, right? And since I'm a power 3 day trader, my example, the example that I'm going to be using is for the market maker model. And basically that is my bias. And instead of using the traditional bias of looking for a liquidity sweep, S&P, something like that, I don't know how do you even do your bias. I just use the market maker model. And in this example, as you can see, I was in a market maker buy model. Therefore, I want to be trading the buy side curve, as you guys learned from my previous market maker buy model video. And I can also further complement this by having price reversed on a previous day low, creating the SMR. SMR is creating when sweeping previous day lows or high impact, high time frame liquidity points, and then creating that 15-minute, preferably 15-minute market structure shift, so you guys can have basically a winning trade, and the winning bias, basically a clear bias. And then you got, this is the trade overall. This is what happened while I was trading. As previously mentioned, I did not trade. It's just to it's just for simplicity's sake. And as you can see, this is the time that I usually trade. At 10 a.m. New York time, I waited for a power 3 setup to a 15-minute created by that impulsive move following the SMR. So you got the SMR, the market structure shift, right? And then you got the impulsive move, which creates the 15-minute. This is exactly what I explained in my power 3 video, which I totally recommend you guys watching. I'll put it right here as well. And yeah, and then we move on. There was an accumulation before. This is basically complementing. We have the AMD, accumulation, manipulation, and then expansion or distribution. I like to call it distribution because expansion for me is a different thing, but that is another topic. So there was an accumulation before. This is a plus, and then there was a manipulation to set the low of the 4-hour. Yeah, because if you trade at 10 a.m., the new 4-hour candle opens, and when it basically taps into a fair value gap, it basically creates the bottom wick of that candle, which is the thing that you want to be putting your stop loss at, just because of how powerful and how stable actually it is. So if you see an A plus setup of the power 3 at, for example, 958, I recommend you guys not entering on that setup, even if it's the A plus cleanest setup of your life, because it has a high probability of it hitting your stop loss or being really close to your stop loss, just because if you're on the buy model. This is an example of the buy model, of course. If you're on the buy model, there's a really high chance that the 4-hour candle will open and will actually sweep out your previous stop loss, and that is how you get Jewish faked out. And yeah, it's pretty not good, and it happened to me multiple times until I finally understood. And yeah, now I'm doing good. And yeah, tap and opposing liquidity point. This is sweep of the 5-minute, normally to kill exhaustion. This is a plus. In price delivered to a buy side liquidity, I had set above to create that 2% gain. Basically pretty simple. You got the range. It can be a small market maker sell model, which then it can be the SMR, as I previously mentioned, or it can just be a little pullback, and then you trade for the top of the pullback, which is going to be your either minor buy side liquidity, or if you are on an expanding candle, then it will be your basically buy side liquidity, because there's no other good liquidity point to be targeting. And then you got the break even point set at the -1 standard deviation. I don't think I have a video of the standard deviation. I gotta make one. That's actually a really good point. Let me actually put that in my notes, which is really good to have a standard deviation video, because this is basically the Fibonacci, and the best Fibonacci setting that you guys should have if you trade the power 3, or even if you're a sniper. The standard deviation is your baby. It is what it is. It's your girlfriend, boyfriend. Then you got right here the emotions. Now, I haven't mentioned to separate things. You got these points. So you got point for the day, point for the percentage and win or loss. Then you got point for the bias, point for the trade overall. Yeah, you guys understand that. And then right here we got this point stands for emotions, because you got before, during, after. This has to be pretty objective. It can be subjective, because I mean, I know it's an emotion, and you can't be like, oh, I think I had this, I think I have that. No. You just see how you felt before, after, and during and after, and you just basically write that down. That's why I usually like to write these emotions and stuff right as I'm trading, or basically before, during, and after the trade, whereas a lot of people actually do after, which after a long time you just start inventing things, which if you're journaling, it's not that good, because journaling is a thing that you need to actually improve in trading and be a good successful trader. And then you got before. So in this example, I was confident as the setup was a plus, as I previously mentioned: accumulation, manipulation, expansion, distribution, a plus setup. And then during the trade, happy once my break-even level got hit. This can be pretty simple, because I mean, you're not risking. It's not a riskful trade when it hits your break-even level, because even if it hits your break-even, you're good, you know. And then after, you're happy as well, and a little greedy, as I could have gotten the bigger TP. And yeah, these emotions, these types of things are really important, because it is normally after Normally after is when you start getting all these mixed emotions, which, as you can see, I got an example of being greedy, right? So that can be a thing to improve. And I can also improve my entry because, as I mentioned, got a little greedy because I couldn't gotten a bigger TP. So next time I can work on maybe leaving runners, which can be an also good thing to improve. And that's why you should always point these. That's why you should always journal your trades, just because of how important it is and how it basically saves you, literally, because you need to improve. How do you improve? By journaling. You write down every single thing that happened, every single thing that you did good, you did wrong, and every single minor detail that you did wrong, you have to correct it fully, to the fullest. When I was losing a lot of trades, what I did was actually start journaling because I saw a video of a guy explaining how journaling was actually really good for you. And by that point, I started journaling my trades, but instead of doing what he did, I started using this, which really actually was very useful for me. Because, for example, when I journaled, I have 3 examples right here marked out. When I first started journaling, I improved my open, high, low, close. It's the thing that I mentioned that I got pretty good at. It's trading the actual 4-hour, waiting for that bottom tick or top tick to form, and then entering instead of just entering blind. Also, market maker model. I learned the market maker model from journaling because, if I did not journal my trades, I would just be entering without a bias, which is not what we want to do. And then also liquidity points, standard deviation. I did all of that through journaling. And I did that just because of this point, which was my improvement that I need to be doing. And since this was a small thing, a minor setback was the greed, I need to work on my emotions, especially greed. See how these minor details, they can be so tiny, but they can kick you in the balls once you start making real cash. They will kick you down just because you leave these little flaws. And as you guys know, I like to call trading water, because once you start leaving these little flaws, these little openings, water will just get in and basically destroy everything in its path. And yeah, final right here, you'll make it. This is pretty simple. You can put a Bible verse. I have an example. I don't have it here shown, but in my notebook, I have an example of the prayer Ave Maria in Latin. I believe it's called Holy Mary. You can also have biblical writings in here. You can have whatever you like, every motivational phrase, just to keep you on, guys, with date, and just to keep you basically going at this goal, because once you're in, you're never out. And that's basically trading life. Now, let's look into, so you guys just seen the paper written journaling, but now there's also another important topic, which is the computer journaling. Because as you guys might have guessed, you're gonna be like, oh, but you didn't put like the level that you enter, you didn't put the level of your TP, something like that. So how are you going to review your trades because you don't have any indication? Well, that's where the journaling on the PC actually comes into play. How and why? So I'm first going to give you an example actually on TradingView. Let this just load. While it loads, so wait. I'm going to tell you guys something, which it's supposed to be for another video, but I can start right now just to give you guys some indications. And for example, I think this one was a long. So for example, I have this right here. What do you see? You got this gray thing, 25105 is going to be your stop loss. Therefore, right here, I should have started for this. So you got the same thing. So you got date, the pair that you're going to trade, which mostly is NQ, Dow, or ES. This was Shao, was when I wasn't profitable. And then you got the session. Normally is always New York for me. Then you got your entry. Entry is always the level of the price. So for example, as I mentioned, entry, TP, and stop loss. So you can guys screenshot this so you guys can copy. That is how I do it. Entry, TP, and stop loss. And they are all in these levels. So your entry will be this darker gray, 25157. That is your entry. And then you got 25210. That is your take profit. And then your stop loss is 25105. That is your stop loss. And why do I actually need this? Because when you actually want to review your mistakes that you've written on the paper, right? When you've written your mistakes on your paper, on your notebook, you're going to be wondering, well, how can I see the actual mistake that I made? Because I have it written here, but I did not see the mistake that I made. So I want to see that. And that's where you go and see that actually. Because what do you have? Very important. You got date, you got the pair, the session. The session is really important so you can have an understanding of the time. And then the entry, take profit, and stop loss is basically what you did right or wrong, where you entered an actual trade. And you can actually go back and watch every single thing, every single bias, every single thing you did wrong, and then you correct it through back testing and another stuff. And then you got the risk reward. Normally the risk reward, this is an R, so 1 to 2, 1 to 1.5, 1 to 1.5. You can see, so I'm risking 1 and making 2. And then you got emotions. This has to be pretty simple. It's just excitement, confident. Is not as impactful as the written one. And then you got why did I enter? This has to be really really objective too and really fast. So you got inversion for value gap, choppy market. That's why no trade. Continuation on for value gap. This was a previous strategy. It failed. I hated it. And then you got the classic power 3, which, as you can see from the inversion, from the choppy, from the continuation, was the one that actually made me 2%, which you can see. Result, it has either loss and percentage that you lost, or win and percentage that you won. I normally like to keep these color-based, so green for win and red for loss. Then you got the weekly P&L, which is like basically what it means. It's like the profit or loss that you made in this week trading. And then you got the monthly P&L, which is basically the same thing as the weekly, but instead of being for the week, it is for the month. And I've done a lot of talking. And also when you don't trade because of holidays or something like that, you just put this or put NFP or something like that, or day previously. Yeah, it's pretty simple. And you got a lot of the, let me see. I think I went too low. Wait. Yeah, so I have a lot of dates marked out. This does automatic for you. And then this no trades is actually false because since I haven't reached these dates yet, I can't actually be sure if I traded or not. So I just put no trade and then I fill it up back again. And I hope you guys enjoyed this video, and if you guys learned something new, tell me in the comments. If you think that I said something that was wrong or misleading, please tell me so in the comments so I can actually improve also on my mistake. And if I'm not mistaken, the next video will be for the standard deviation and every single thing that you need to learn about it. It is really important, the standard deviation, one of the most important topics. And back to journaling and journal your trades, man. You'll improve a lot from journaling. And if you don't journal, you're basically entering blind because you don't know what you did. You don't know what was your mistake. You don't know your flaws. And if there is no flaws in trading, that basically means you're unprofitable, because even mega profitable traders have flaws. They have losses. That's why this is a probability game. But now you want to win the odds. You don't want to beat the game, because you can't beat the game, only if you're Jewish. But you want to beat the odds. You want to get above 50%, and actually make money instead of losing more than you make. You understand? And if your journal is as important as emotions, because journaling for me is a part of an emotion. Since if you guys seen my emotions video, emotions take up 80% of your trading career, of your trading life. So please, man, focus on journaling. Journal every single trade you take. And if you don't take a trade, you don't actually need to journal that, because you were just looking for a setup. You can put something like choppy market, like I put right here on the digital one. But it's up to you. I normally don't do that. I normally just journal very well my losses and my wins, and also my break-evens, because break-even is also really important. So I can also further develop my break-even point, my limits, and where should I actually be setting my break-even, And I hope you guys enjoyed this video, and God bless.